All right, so welcome. It's Sasha, the options coach. And in today's video, what we're going to do is we're going to take a look at a $1,000 dividend portfolio as far as what would you do? So this question comes specifically from somebody right here on Facebook. So periodically I'll go and check out Facebook and part of just general different trading groups just to see what kind of questions people ask and answer some of these questions for you guys. So here the person asks, I am just putting a feeler out there for research. If you were just entering the market and had $1,000 to burn, but still want to make good dividends, how would some of you invest? So I think there's a couple of different ways to kind of take a look at this in terms of investments, because the bigger question is are you looking to do things more on, call it the dividend side, or are you trying to do something more on the appreciation side? So there's a little bit of a, call it a balance approach. So when we start looking at this and we go into my slide deck here, so let's say we're going to draw something out, and what we're thinking about is, okay, if we have kind of this seesaw effect and we have certain stocks here that have a good dividend or other stocks that have a really good appreciation, if you have a stock that's paying good dividends, usually it doesn't have a lot of great appreciation. So this is kind of the natural point behind it. So if we, on the other hand, have some stocks that are appreciating really well, they often do not pay a good dividend. And that's the whole point behind a dividend. Usually when stocks give a dividend, it means the stock is a little more stable. Now, as far as a portfolio goes, what you could do is go in and allocate, let's say, a few nuggets into the dividend sector and a few nuggets into kind of the appreciation sector. But this would, of course, depend on how long of your time hold is, your horizon. Are you looking for a few day moves, a few week moves? If those are the cases, then, well, it will depend on the chart at the time or the price movement or the price action at the time. Because the shorter the move, it just really comes down to a few price actions, getting a little bit lucky maybe, and getting into the right entry and so on. But if you're actually looking to spread capital into kind of longer term holds, then you might want to choose something that's a little bit more, call it stable, or has been appreciating over time. Then what you'll do is have the other part of the portfolio of that $1,000 maybe into a few dividend plays, okay? And those might be a decent dividend play between, call it maybe 3% to about 9%. Anything higher than about that, you start to get into some trouble because those stocks are a little less stable. Now, could you go a little bit more in some areas? Sure. But I would say be a little more careful. And then this kind of does come down to, well, how much money are we investing? And if we're dealing with $1,000, well, are we putting $600 on this side and $400 over here on the appreciation side? Or are we kind of flipping it around and maybe doing, the other way, 600 for the appreciation and 400 for the dividend side? Or are we keeping kind of like a balanced approach where it's $500 for each? So you could really balance these things out in so many different ways, depending on what you're looking for. So anyways, those are a lot of things to consider, obviously, as you do these things. But if we go back to the question was not as specific in this case. It's like if you had $1,000 to burn, well, if you want to actively trade it, are you looking for appreciation? Are you not? Are you short duration? Not. But just to look at a few different stocks here, for example, UPS over here, I mean, you won't be able to blow $1,000 on this very quickly, but you could buy one share. And one share, what it will do is, you'll spend about $150, but it'll give you about 4% on that dividend yield, 4.42. So it's about $1.63 there. Okay. So it's not a lot. Now you have also other stocks that are kind of like going to give you a little bit more. Here is MO, cigarette company, 9%. You can see you're getting quite a bit more on the yield, and the shares are a bit cheaper. But again, 9% is on your money. You're getting about 98 cents per share there. Here's Pfizer, also another one, 6.65 on the dividend, 42 cents. So another not a bad one. Verizon, 6.78. 6.665 on the dividend. AT&T is very similar, so 6.69. So I wouldn't really, if you're doing one and the other, it's kind of like you're tying your money in the same kind of spots. There's also stuff like KMI, 6%. And again, I'm looking at things that are kind of liquid and volume and have movement and so on. But if you go to something, let's say a bit different, like even Apple in this case, like look, it does pay a dividend, but it doesn't pay a lot at all. So, and the stock's already 169. So if you're trying to blow $1,000, you don't have a lot of money. You'll buy one share and that is it. So you really don't have the luxury of those cases. And then also just to show you another idea, here's DX, which gives you 13%. And that is a monthly dividend, but it barely trades any volume. So this one is much more risky. I believe there's another one called CRF, another one 16%, also monthly. But again, very risky, hard to borrow and so forth. So anyways, point being is I'd be a little bit more careful if you're trying to just, how you want to spread your money. So kind of take a look at the sheet here as I was pointing things out. You could spread it in many different ways. And the more dividend that you get, obviously, the less appreciation you'll get. So it comes down to a balance of appreciation versus dividend and how much capital you want to put in each. So hope that helps, gives you a little insight and things to think about. Truly appreciate you sticking with me and watching some of these videos. If you got a question, feel free to join the Facebook group and post some questions directly in our Facebook group, and continue to learn, educate yourself. And we do a lot of other trainings in those groups as well. And I'm trying to continue to expand those areas for connection and giving you a good education. Anyways, thanks again, and I will see you next time.